Okay, so now the next question would be, how do we go about getting these tax credits? Well, when we do an enrollment with Covered California, we've got to give them an estimate of what we think our income will be for the coming year. And for some people, that's relatively easy. If you have steady income from year to year, you can simply look at a past tax return and work off of that. But if you have fluctuating income, it can be a lot more difficult. But here's the good news. Covered California realizes that the person that goes to work every week and gets a paycheck is probably also getting health insurance on the job. That's not their customer. Their customers tend to be people with fluctuating incomes. They're in the gig economy, they're self employed people, and they can have big changes every year. When we were putting this whole thing together over 10 years ago and we were doing training with Covered California, we asked them the question, how do we deal with this? And the kind of response we got from them was very simple. They said, you give it a good faith estimate. We even would say, they would say, give it your best guess. But here's the important thing. When we do the enrollment up front, it's not cast in stone. We have both the opportunity and the obligation to report changes along the way. So that's why it's really important that when you notice there are significant changes in your income, to let us know so that we can make those changes along the way. Because there is and will be a reconciliation process that happens at the end of the year. By the end of January of the following year, you get a form called a 1095A form. It's kind of like getting a 1099. And basically, it tells you exactly how much tax credit you received through the course of the year. And as a result of getting that form, you've got one extra form to file with your tax return called an 8962 form. And simply stated, it's a form that says, this is how much I got, this is what I was supposed to get, and a bottom line. Are you even? Did you get the right amount? But is it also possible you got too much? And if you did, you have to pay it back. It can go the other way too. If you didn't get enough, you would get additional tax credits at the end as well. So the reason why it's really important to stay on track throughout the course of the year is you don't want to be in a position where the following tax year comes along and you owe them a lot of money. Or you don't want to find out that you missed out on tax credits and you've been paying too high of a premium all year long. The good news is if you do owe what they call clawback, there are no penalties, there are no interest. You just have to pay back the tax credits you weren't entitled to. But our goal is for people to do their very best right up front to try and make a good faith estimate as to what their adjusted gross income, modified adjusted gross income will be for the year, to report changes along the way so that when the 8962 form is filed, that they're pretty much even and we got it right in the first place. So that's what we can help you with.